Broadcast is now starting. All attendees are in listen-only mode.
Welcome to the Ablesys webinar. Same microphone, same setup. I've been using for 15 years. I don't see any anything I can do. Testing. Can you hear me? Testing, testing. Test 1, 2. Test 1, 2, 3. Okay, great. So happy. Sorry about that, everyone. Same microphone, same setup, same everything. Okay, good. At least I'm glad it's working now. Again, sorry for the delay here. Obviously, on my end, I wouldn't know that unless you said so. So, thank you so much. Okay, great. So let's start over. Thank you for being here and patient. Just a little tech glitch. I'm glad we're okay now. So anyhow, we're going to jump in on this daily weekly chart. This is it. You trade it, doesn't it? The key is to just put the two charts together. In this case, we have a daily weekly. And we're looking for triple confirmation. Blue bar, these small dots are the daily support points, which will stop or block the prices from, like it did about times there. Now we did get stopped down here. We'll get back. We went right down to our support point and stopped. What's that mean? It means stay in the trade. You're in an uptrend. You've got the blue dots below. Blue means uptrend. Anything red means downtrend. Green is sideways. It means stay in the trade as long as, again, you're above the blue dots. Stops go under the blue dots, under the small blue dot. In this case, we were stopped out. It made a couple points on that trade. These blue dots, as you can see, are slightly lower than these. So the lower small blue dot. Right now, the stop would be there as a perfect example. These two dots are 238. And when we did get stopped out here, by the way, we're right back in again on the triple confirmation. So we're looking for triple confirmation. That lowers the odds greatly. And we want those odds stacked in our favor before we make a trade. So this one's working out well. We're in at 228. We're at 243, picking up about 15 points. Of course, if you got a call option, then you're doing really well. Let's jump in on that mini NASDAQ. Now, I use 3 time frames at once, and I don't want to confuse anyone, so we'll keep it simple. Looking at a 1, 2, 3 chart, which is our main chart, keep in mind, the Fed meeting is Wednesday. I mean, there's about, 8 or 9 meetings a year? It's been this way for years. A couple days before, it's usually very narrow trading range, very choppy. I always say it, but not everybody understands, and that's okay. When you have a Fed meeting, and that's the only thing that I even keep an eye on, really. The markets, it's a big move. The markets get a little scared to make any big moves because it's a big announcement. It's very important. Nothing more important than the Fed meeting on interest rates. So that's probably why it's very, choppy, very narrow trading range. Another reason, we're at all-time highs. So it's very hard to go higher than that because it's never been higher. The market is S&P, or really the whole market. Antonio, what do you mean if the stops are too far? You just put it at the previous lower small blue dot. It doesn't matter how far away it is, that's where you put the stop. For daily, weekly trading, for swing or position trading. It goes on the previous lower blue dot. If you really feel it's too far away, or for whatever reason, you just have to really just kind of be like a robot, just go with the table chain signals and stops. Now, for intraday trading, you can put what we do is we start off the stop at the previous, here's a good example. I want to show this one. Triple confirmation, this was a winning short signal. Just for intraday trading, we're just going to put it 1 point above the top of that red bar for the E-mini NQ. Now we did have a losing trade on the first trade because these red dots were not there, X's were not there at that time, but there's just no way I would ever enter. Distance between the dots support resistance. So this is a 1, 2, 3. This particular chart is a 1 minute chart. How's the sound now? Yeah. Okay, well, I can tell you right now that I'm going out and getting a new maybe it's the only thing I can think of. So, can't do that at the microphone. I'll definitely do that. Definitely have a new microphone for Thursday's webinar. Apologize again for that. What I'm saying, Barry, was it's a 1 minute, 2 minute, 3 minute, and the price bars and the square dots are all 1 minute, not 2 minutes. I know it says 2 in the upper left corner here. It's a 1 minute chart. It only says 2 because I just put the 2 first when I set up the chart. It goes by order. It's complicated, but I assure you, it's a 1 minute chart. 1 minute, right here. 1 minute chart, I repeat. I've been using this same 1 minute chart for 15 years. Never once changed it. Okay, so we would short here. You got yourself a nice little profit. You remember, now, again, I always recommend, if everybody's read the trade rules, especially your new if the market, the VIX is under 14, which it's way up, which it is, use a 239 chart, especially with the big Fed meeting on Wednesday. Use a 3.9 chart. I recommend that when the VIX is under 14, and it's at 13. I check CNBC every day in the upper right corner. It gives you the VIX. VIX right now is at 1320. You may want to consider a 3.9 chart. That's my suggestion. Don't tell anybody what to do. But when it's under 14, what does that mean? It means there's no trends. Nobody can win if there's no trends. I mean, yeah, it was like a break-even day today. I mean, that's how, that's not good enough. That's not good enough. Now, the first and last hour, good point, John. Then you want to use the 1, 2, 3 chart. I always use the 1, 2, 3, the first and last hour. But in between, go to a 3.9. I don't want to confuse anybody. With 20,000 traders, I say one thing and I get 4,700 emails. So that's why I'm very cautious what I say, and I keep everything super simple for that reason. Because then I get bothered with thousands and thousands of calls and emails, and it gets overwhelming, obviously. So I know I've said it a million times, but I'll say it again. When the VIX is under 14, the market's not going to move. So nobody can win. I don't care who you are. Consider a 3-minute, 9-minute chart. You can only have 1 or 2, 3 trades a day. Basically, you're not going to get much happening. And when the is like this, nobody can win. Nobody can control the market. It doesn't happen often because last week, the week before, I mean, quite frankly, the last few months have been nothing but unbelievable. I mean, nothing less than fantastic. And I've got emails from people making literally thousands trading one lot. But they're like a robot. They don't trade their emotions. They trade the charts. Stops. That's the hard part because they will be losing trades, I guarantee you. You have to trade the charts and the stops. For example, short here. Here's a short, there's a long, that's a losing trade. That was about a 5-point loser. There's a short, it's a winner. Obvious no trade zone. Long, break even, no trade zone. Now you're in the, you definitely don't want to be doing much, or better yet, don't even trade when the VIX is under 4. Well, I don't want to say that, Rick, because sometimes you get some really good days. All I'm saying is either be cautious or use it when the VIX is under 14, because it's hard to win for anybody, even Abletrend. Fortunately, we've got all these no trade zones. Didn't trade that 10-minute trade here, didn't trade. So that kept us out of a lot of trouble. One nice trend in here, triple confirmation sell. Picked up a few points, maybe 5 points there. That's all you can get, win 5, lose 5, lose 5. At the end of the day, you're up or down a little bit of money. No big deal. Now you go to a 3-9 chart. And you just have a lot less. But you just want, long here, break even. I mean, short there. Short there, make a couple points. Short there, make a few points. Nothing to get excited about. Nothing you can do. Short here, lost a few points. So at the end of the day, you basically, there's not a whole lot you can do. I hate that when it's like this, but what can you do? Yes, Antonio, the X's are for confirmation. Correct. I can tell you that the Russell has been a lot smoother in this difficult couple days of choppiness. Look at his Russell chart. I mean, that's a nice chart. So when you see the NQs choppy, narrow range, jump over to RTY. You might get a nice surprise. They often trade quite different. Yes, exactly, Alan. A lot of break-even trades. And the first trade of the day, well, I kind of went over that already, Michael, but I'll do that again for you, buddy. I did go through that in detail, but I will again. First trade was just too long. I mean, there's no way I'm touching that trading on that bar. It's like a 14-point bar. Compared to the rest of the chart, it just looks out of place. Just wait for a smaller bar, which was the next one. That's fine. It was that was still a long bar, but it was smaller. So you just get in at a little, much better price. Still a losing trade, but, small loss. Not a whole lot of harm done. I mean, nobody wants to lose. But that of course, will come about. So there's not much you can do about this right now. There's just very little movement, very little trends. On the intraday minis now, the markets are doing great. This is such a popular market. That's why I'm going over it. And I like to go over a difficult market. I don't want to share a great trade. I mean, yes, it's nice to see, but the value enable trend is when the markets are tough to trade because of all the no trade zones and the low risk trades that it gives out. All right, I hope that was helpful. Thanks for being here, everyone, and I'm always glad to help anytime.